Good afternoon, ladies and gentlemen. Caledonia Mining is a Zimbabwe gold producer, and I'd like to just run through the presentation very quickly. I'm going to flick over a few of the slides. We are in a booth here, and we do have some presentations, so if there's anything further that you would want to know on the slides I flick over, please come and see us. The normal and necessary disclaimer. Quick company overview. Caledonia is a listed gold producer, listed in New York, Toronto, and London. We've been producing gold. We've owned the mine since 2006. It's been producing gold for 110 years in Zimbabwe, and we've got about 9 million, nearly 10 million in cash, and we believe we're undervalued, probably like most junior gold players, with a trading PE of about 4.5. The middle block just shows you some of our production profile. 2016 to 2018, relatively flat, 50 to mid 50,000 ounces. We're building a new mine underneath the existing mine, which will come into production 2022, and it'll ramp up to 75 and 80,000 ounces. Importantly, the all-in sustaining cost will drop quite dramatically. And when we're running at our run rate of 80,000 ounces, all-in sustaining cost will be between $700 and $800 an ounce. We're a dividend payer. We've been paying a dividend at the Caledonia level since 2013, about 27 cents a year per annum, on a yield of about 4.7% at the moment. All of the money that is being invested in this project, all the dividend that is being paid to Caledonia shareholders, comes from Zimbabwe. So the perception that you can't do business in Zimbabwe, you can't extricate cash, I'll hopefully try and explain that to you. But this is a picture that business can be done in Zimbabwe. Our medium-term project is to complete what we call the central shaft, which is effectively putting a 1.2 kilometer shaft down. That will be finished this month, the actual physical sinking. And then we will start equipping, which will take 12 months. And that allows us to build a new mine underneath the current operating mine, which is between levels of 750 meters down to 1,200 meters. So we're building a new mine from the cash generated from the old mine, and that will give us a life of mine of between 13 and 15 years, based on reserves and resources that we have at the moment. Longer term, we intend to, there's a slide that will show what the cash flow profile is going to look like. We intend to look at the utilization of this free cash flow that's going to come out of this operation for either returning to shareholders if we can't find a better use for it in country or maybe outside of country, but our focus is in country at the moment, or finding new opportunities in Zimbabwe, low cost of entry, and we believe that we know how to operate in Zimbabwe. Those are just some metrics, but the important thing is the compounded average growth rates on the right-hand side. Revenue up 12%, production up 8%, operating cash flows up 37%, attributable profit to Caledonia shareholders 31%, return on shareholder funds 14% so far, and adjusted EPS up about 44% over the last 3 to 4 years. Zimbabwe is a very prospective gold country, gold region. That map shows you the gold greenstone belts. That area is about as big as Burkina Faso. There's lots of gold there, and it's been completely ignored for the last 30 to 40 years. Skip that. That shows how we have increased our reserve and resource base. We've not only increased it in absolute number, but we've increased the confidence levels more in measured and indicated now than we've had. And this year we'll be putting out another resource statement which will show you what we've done over the last 12 months. This is the new shaft project. That left to right is about 3 kilometers. The gray areas are mined out, 110 years of mining. So you can see we need to go deeper. Below the 750 meter level, which is where the gray stops, you'll see some light blue and some yellow. That's the new areas, large known resource bases, and that's where we're heading towards. That's the current bottom end of the mine. That's the current infrastructure that we use at the moment. The shaft is not ideally placed, but that's where it was when we acquired this mine from Kinross, and the 3 operating levels are there. That's where the staff go down at the moment. You can see not the best layout. And then we have a subvertical, small, to get us deeper into the ore bodies. That's what the new shaft will do, situated in the center of the mine, so we can develop in 2 directions. We're going to develop 3 levels now. The 4th level will come via a winze, but that'll be via a decline. That'll be in 5 years' time. But those 3 operating levels with that shaft, that will enable us to have 80,000 ounce gold production. This is the interesting slide. The dark green bars show you the amount of money we've been investing in this new project, in building the new mine. The gray, that's the free cash flow. And as you can see, as we finish the project in 2019, some equipping in 2020, the free cash flow just gets bigger and bigger and bigger. This is only based on a technical report information, so it's got no inferred resources implied in here. But we have got very good inferred resources, and Blanket has traditionally converted inferreds to measured and indicated for many, many, many years. We're not feeling resource constrained at all. The investment case is substantial production growth, fully funded, and we are absolutely confident that we've de-risked this project and it is going to get completed now. Caledonia has an attractive dividend yield, as I said. We're going to have a high margin operation, producing gold at $700 to $800 an ounce. We see good margins coming out of this operation. And we've got a good management team, some based in South Africa with technical skills, 100% Zimbabwe management team in country, and they have been there a long time. So we've got well-educated, well-equipped operation in Zimbabwe. Let's not ignore the fact that there are challenges in Zimbabwe, because that's all you read about. We had some safety issues on the mine. Unfortunately, we had 4 fatalities over the last 2.5 years. A lot of that we think is due to the socio-economical situation, but we are addressing that with retraining, culture change, and doing an enormous amount of work. Lower grade dilution has been a problem as we've gone deeper into the mine, and we've changed some of our mining methods for safety reasons, using long hole stoping into narrower vein areas. We believe we've actually conquered that now, and we're starting to see the grade tick up. So the grade is running at about 3.25, 3.3 at the moment. Reserves and resources are running at anything between 3.7 and 4. So we expect in the longer term that the grade will pick up closer to the 4. Electricity is a major problem in Southern Africa, and especially in Zimbabwe. We do have a 12.5 megawatt diesel genset farm, so we are not 100% self-sufficient, but we can weather the storm. We are looking at going off-grid, building a solar farm, which we can afford. So that will be worked on in the very near future, and we're working with the government very, very closely to see what we can do to mitigate these outages. Zimbabwe is getting bad press. We are convinced with our interactions with government right up the line that they are committed to make a difference and make some changes. Recent announcements that the IMF has signed a staff monitoring program with Zimbabwe for the next 12 months. That means that the IMF is there as advisors. They have to sign a bilateral agreement where they agree to install certain fiscal disciplines. If Zimbabwe wants to ever join the real world again and have sanctions reviewed and hopefully removed, they have to go through this process. The fact they've committed to it is very encouraging. We're already seeing deficits on a monthly basis being eradicated. So there's some very, very nasty tasting medicine being administered in the country at the moment. It tells us, though, that the government, this new government, is committed. They can't get themselves out of this by themselves. They're looking for businesses to invest. They're not going to get investment if they don't take some unpleasant muti themselves. So there we go. We're looking at a 2 to 5 year window, increasing production, looking for new opportunities, and producing lots of cash. Thank you very much.